Good morning, good afternoon, everyone, and thank you for tuning in to our May edition of ARIVE Partner Spotlight. ARIVE Partner Spotlight is a monthly webinar series that we host in which we invite thought leaders and experts from our lender partners to talk about topics that are relevant in today's market and that can help you grow and scale your business. My name is Harish Tejwani. I'm joined by my awesome colleague, Amy Hulett. We will be moderating today's webinar. This webinar is being recorded, and the recording will be posted on ARIVE's YouTube channel by end of this week. If you have any questions in this webinar, feel free to ask them in the Q&A tab below, and we will take them as they come. Today, I'm very excited to welcome our longtime partner, REMN Wholesale, to this session. They have been partners with ARIVE since March 2022. So we are grateful for their partnership. And they have decades of experience in serving the wholesale community. That's all they do, just like us. They are only serving the mortgage brokers. Today, we are going to discuss a very important topic, which is very relevant: digital HELOCs and non-QM products. Summer is almost here, so we thought it's time to turn on the heat. So we brought in these experts to talk about these very important topics, given the rate markets. Rates have been really stubborn, so they're still pretty high, and homeowners are sitting on piles of equity. So we think these two programs are like SPF 50 for your borrowers, so that they don't get burned and they can still get the financing they need. So I'll let our panelists introduce themselves. I'll introduce my good friend, Carl Markman. He's ever smiling, always willing to help. He's their SVP of Wholesale and National Director of Sales. And maybe I'll hand it over to you, Carl, to introduce REMN and the panel.
Thank you so much, Harish, and thank you, Amy, for handling this. It's interesting, Harish, because I've been on a lot of your webinars. I've viewed several of them, and I've never seen so many panelists before. So there's a lot of us on here because there's a lot of experts. We want to make sure we get everyone's questions answered. Before I get started, REMN's been in business for well over 3 decades, about 36 years. We're not just your mom and pop shop that just joined the industry. And the tenure is incredible. And I'm going to go through each of the panelists today and show you the type of tenure that we have here, not only in sales, but also in operations. It's not unheard of to have someone, an underwriter with the company for 20 plus years. It's very common with our company. But we appreciate ARIVE, our customers and your customers alike, the brokers and bankers out there that utilize your services. They praise you up and down all day long around the country. So we appreciate the partnership. Again, my name is Carl Markman, the Director of National Sales. My tenure with the company, I've been here for about 16 years, which is unheard of in this industry. I also have joining us Sandra Rodriguez. She's one of our regional sales managers. And Sandra's been with the company a staggering 22 years. Julia Murphy. Julia is one of the youngest ones here, only 10 years. And Seth, who actually is one of our senior business development managers, senior vice president. Seth actually works for one of our other divisions. We got into the HELOC business a couple of years ago, coined the phrase, the 5-day HELOC, the digital HELOC. It was amazing. We love the product so much. We actually bought our own company, and that company is NFTYDoor. So Seth was one of the first people that began with that company. So we're very, very happy to have him and the whole team with us as well. There are many, many types of loans that we offer. We offer everything from Fannie and Freddie types of business and VA. We're specialists in every single product, including ITIN for our nationals and so forth. But today, I think we don't have time for everything. So we're going to really concentrate on 2 products, and that is the non-QM and HELOCs. And one thing I want to repeat what you said, Harish, on the start of this, is that we are only wholesale. We do not have a retail division. We're only wholesale. We're never going to compete with anyone in the broker channel. I am going to hand this off to start with the digital HELOC because it is very different. We don't have too many competitors in this space. It's the type of product that you can literally close same day if all the stars align. And you can make a staggering amount of money if you do a number of these loans. It's not that difficult. And also to set yourself up for the future for those cash out refinances when those rates do start to come down. So Seth, I'm going to hand off to you for the digital HELOC.
Sure. Thanks, Carl. You didn't mention my tenure in the mortgage business. It's been long. I can't get out of this.
It's 31 years, I believe,
yeah.
right? Something like that, Seth.
So anyway, as Carl mentioned, we joined REMN probably 2.5 years ago. I started with NFTYDoor when we originally launched, and it was interesting. We weren't doing a lot of business. We were only licensed in 5 states. But once we saw, the opportunity with REMN, it was just such a great partnership because now we're licensed in all 50 states. We can do primary, second homes, investment properties in all 50 states. It's really been an exciting opportunity for us and just really amazing watching the growth of the company. As everyone has mentioned so far, first mortgage rates are really low, or a lot of borrowers have low first mortgage rates. Rates are kind of high right now, so borrowers still need cash, but it doesn't make sense to do a cash out refi for a lot of these situations. However, borrowers also have a tremendous amount of credit card debt, let's say 25, 30%. They're not moving because of a lack of inventory, so they want to do some home improvements, maybe, customize their house based on what they're looking for, or a host of other reasons why they might want cash. And so with REMN's Equity Access HELOC, it gives you guys the opportunity to offer just a fast, easy process for both yourselves and your borrower. What we focus is on low touch, high volume. Once you submit a couple-minute application, we take it from there. And I think one of the most important things that makes us a really special company is we're not just about the automation. Yes, we can get a loan closed in the same day, but we all know some mortgages are a little trickier than others. People have questions, borrowers want to talk to someone. So we have a whole client experience team behind the scenes that will walk the borrower from start to finish if necessary. A lot of times our automation will do it, but there are other times people might not be technologically savvy. And our team, from my standpoint, from first being here, is just night and day, so much better. We're really on the ball. Each loan will get their own client experience manager, who's sort of the quarterback through the whole process. So let's say a borrower, our automation only picked up their W-2 income, but they also drive an Uber at night. Our team will help that borrower get through the process using as much income as we can verify, not just what the system verified. So it's that human touch that really makes us different. And it's the opportunity for you guys to do a lot of these, make great money, and let us do the heavy lifting. So as you know, home prices on average are up a tremendous amount. We say 47% here on the slide, but there are a number of places where home values are up 100% or more. So borrowers have a ton of equity. And again, credit card rates are starting to crush borrowers. The economy is a little bit more uncertain. So a HELOC is a great opportunity to pay off that debt or have some dry powder for emergency funds. The benefit of the HELOC is they're only going to make payments on the outstanding balance. And for our product, it's interest-only payments as well. So with no prepayment penalty, even though we require a 75% minimum draw at closing, they can pay back anything they want at any time and still manage that payment to their budget. So we are closing loans as fast as one day, as we've mentioned. our average closing time frame, even with the human intervention, is 6 days. We're not asking you to do a lot. We're asking you to do a 2 to 3 minute application. And again, we'll take it from processing, underwriting, closing, post-closing. We handle everything. In terms of paying off that credit card debt, if a borrower wants to do a debt consolidation loan, we actually show them the debts that we're pulling from the credit report, and they can self-select which ones they want to pay off. They'll see their DTI reduce in real time. So there's not even any back and forth with you guys like, hey, what if I pay off this debt? What happens to my DTI? Let our system handle that. Let the borrower choose which one they want to pay off. The other thing is, what we found in the past is a lot of LOs didn't want to spend the time going through collecting all the paperwork. You know, these might be smaller loan amounts, even though we go up to 400,000. So they may just refer them to a bank or a credit union. And to be honest, that's, you know, a 30 to 45 day process for your borrowers, where they'll have to collect a ton of documents. They may not even know if they're going to be approved during that time frame. They might have to pay for a full appraisal and other costs that they'll incur. Whereas with us, they'll know if they're pre-qualified before you even send the invitation out. So they'll have that pre-qualification in their email within seconds, and we pre-screen everything for you guys: credit score, AVM, all of the things necessary to make sure that you're using your time valuably. You're not sending loans out that won't qualify. You're not, you know, doing things that just, again, take your time, and you guys can focus on first mortgages. You can focus on a lot of other things. When you submit the application to us, just know it's in great hands. Next slide, Julia. All right, so just some criteria. And again, if you ever have questions about the guidelines, please don't feel like you have to remember these. You can always reach out to us to get access to the most recent rates, the most recent guidelines. It's a great way to stay up to date. Again, you know, once you start with us and you are on our email list or talking to your AEs, we are consistently improving the product, expanding our guidelines. For example, now in Texas, as of yesterday, we're doing not only primary residences, but second homes and investment properties. So again, we're always trying to do what's best for you guys to support you and your business. So we'll go down to a $25,000 minimum loan amount and up to a $400,000 loan amount. So again, great opportunity for you guys to earn revenue with these bigger loan amounts. Now we have a max CLTV of 80%. We'll go down to a 640 credit score, but just know as the credit score declines, we start limiting the max CLTV. We will allow all occupancy types in all 50 states now, and it's 1 to 4 units. We allow condos that are warrantable and non-warrantable. So don't worry about collecting a condo questionnaire. We're not asking for it. As I mentioned, we have a 75% minimum draw at closing, but the borrower can pay back what they don't want, or they can draw up to 100% if needed. And our product is a plain vanilla HELOC. It is not hard to explain. There's no different systems or anything that might be necessary. It's a 5-year interest-only draw period. And again, we're qualifying the borrower on that interest-only payment. After those 5 years, it then converts to a 25-year fully AM loan. And most importantly, wherever you guys can lend, we're here to support you.
Hey, Seth, I have a couple of questions if you don't mind, because I'm
Sure.
sure people that are listening have some questions as well. The first question
Sure.
I have is, if I'm a loan officer, how do I get that link to my customers in order to start that process?
Yeah, so each one of you will have access to your own portal. In that portal is complete transparency about your pipeline status, documents related to each loan, real-time rates, a video training center. But the thing that most of our LOs that produce the highest volume is they use a personalized marketing link. And you can send that out to your entire database of clients, prospects, partners that you do business with. And essentially what will happen is it's your link, your headshot, your name, and your borrowers can start the application right from there. And it's a great way to drive inbound business as opposed to continuously making outbound calls.
Okay, now I've got the most important question that everyone wants to know, obviously, is compensation. So as a loan
Yes.
officer, on these loans, you're getting a 2% compensation. So the example that Seth gave of a $400,000 loan, and that is not uncommon, by the way, with the values that are out there, that's an $8,000 commission on a HELOC that doesn't take that long to produce. So if you're doing a few of these a month, you can see how this can add up. Seth, you want to explain how quickly we pay?
Yeah, so the way we've set up our system is we actually like to use something called real-time payments. Real-time payments is like Venmo, where the minute we hit send, the borrower receives their funds in their account. All of the vendors that we have on the settlement sheet get their money. But most importantly, we pay you guys the same day as funding. It's not every month, it's not bi-weekly. The minute the loan funds, we'll send an ACH to you guys and you'll get your commission.
Yeah, just to clarify, we don't pay the loan officers, we actually pay the brokerage of the banking, the
Correct.
account, the company.
Yep.
Yep. Okay, some good stuff. Thank you.
Awesome. All right, any other questions?
So Seth, we have a lot of questions that have come from the audience. Do you want to read them and maybe pick up the ones you think are more important? I would say one which I liked is no EPO. So I believe, Sandra, you answered that. So there was a question, is there an EPO in HELOC? So I believe the answer was there is no EPO. Is that accurate? So,
Correct.
Correct.
and Seth, anything you think which is relevant, because we will post a recording which will miss these questions. Anything you want to kind of repeat and answer them?
Yeah, so we don't allow manufactured homes. If you are a broker on this call who wants to sign up, reach out to any one of us on the call. We'll get you signed up. Takes about 24 to 48 hours to go through the process. And we can have you up and running with your own portal probably within a week. This is all borrower paid comp. So the fees charged to the borrower are based on the line amount netted out of the draw. So they don't have to come to the table with any money. It gets netted out of the draw that they take. Exceptions. We are not an exception company. I'm just going to throw that out there. I've been asked almost every day about exceptions. This is meant for our team to do the best job they have based on our guidelines and our system to really power through it and get you to closing very fast.
Yeah, with regard to exceptions, one of the reasons why Seth has stated that it's about 6 days on average, but we also close loans the same day, is it really depends on which way the loan goes. We use a system that picks up all documentation. If that hits on all fronts, it's very, very fast. And if not, unlike other digital HELOC companies, we do have a staff of underwriters who actually review the files, can review documents. So that's where sometimes things could take a little bit extra time, but that extra time really increases the pull-through to get these loans closed. Rather than saying a yes or a no, there's a maybe a lot of times to try and work it out to get that customer into a HELOC.
Yeah, we actually spend a lot of time trying to figure out loans that may be on the cusp of qualifying. You know, we'll reach back out to the borrower. We'll say, hey, do you have any other income? We allow non-owner occupants. So we'll ask them, is there someone that will co-sign the loan for you? So it's not that yes or no. It is, let's try and figure this out in some circumstances.
And if the initial AVM doesn't hit, and sometimes it doesn't, I think we all know with HELOCs especially, we do have another couple of ways in order to get the value up. And I recently saw one that was increased several $100,000. So if it's a no upfront because of an AVM issue, we do go on to the next step to try and get that customer into the loan. It works
Yeah,
most
I mean,
of the time.
it's 4 different valuation methods. So we are not saying that yes or no. One of the other things that comes up quite a bit is we have a whole title curative team. So if a borrower wants to pay off a second, or there's anything on their title, let's say an IRS lien or a judgment. We had a borrower that had 11 parking tickets in New York that were showing up on title because I guess they make them judgments. We worked with the borrower throughout the process to make sure those were paid off either beforehand or throughout closing. So just because something is on title, that doesn't mean the loan is dead either.
Seth, I'm just going to read a couple of these questions because there's some good ones here. One is, can you please speak to the disclosures in HELOCs and timing? Also, as a broker, will I get a copy of all docs for my files?
Yeah, so the minute that you send the application to the borrower, we distribute the broker documents or broker disclosures. So again, it all flows that way where we are doing a majority of the lift on this file. And we go back to that portal that each one of you will have access to so that we can provide you with all of the information that's necessary for you to understand what's going on, not just with your entire pipeline, but with each loan. And once you dig into the loan, we provide you every single document that you might need for your internal compliance. Now, one of the awesome things about the pipeline that we've released for each loan is we actually have a button that you can press and it'll show you exactly where the borrower is in the process, their exact screen. So when you look, if your borrower has a question, and they may come to you because you have the relationship with them, if they have a question, you can click that button. You could talk to them about exactly where they are and exactly how to resolve any issue.
Can I submit a HELOC if the property is currently listed for sale?
No, so we have a seasoning requirement of 60 days. So the house can't be listed for the previous 60 days. Now on the flip side, we have no seasoning after the purchase. So if you have borrowers that want to make a little bit stronger offer, let's say for closing on a purchase, they may, throw a little more cash than they're comfortable with. After that closing, they can then get a HELOC from us with no seasoning requirements.
And how is escrow and closings handled?
So for title, again, we're handling everything. You don't have to arrange closing. We try and do everything remote online notarization in any state that allows it. And once a borrower is clear to close, they actually can click on a close now button and a notary will pop up and they can close instantaneously. And both borrowers don't even have to be in the same location. So there's no need to schedule someone to come out and plan all of that. Now, there are states such as Texas where they have to close in person, but we handle all of that. So I can't stress how easy we make this for you. There's no escrow because it's a HELOC, and then we disperse all the funds.
Yeah, I think there's way too many questions to do a Q&A. I think we'll be on here, but I am going to do, there is one I'm going to repeat because someone is asking this question, and I probably believe that a lot of people are asking this as well. Is broker comp based on, well, here it is. I missed it because it already came down already on this here. Where was it? About the compensation, if it's borrower paid versus lender paid comp.
Yeah, so it's all borrower paid, and you guys are going to get that 2% comp on the line amount, not what they draw. So even if they draw 75%, you're going to get paid on the total line amount.
And I guess either Sandra or Julie can answer this question. There's a good question. Where can I locate compliant marketing materials, for social media, et cetera?
We do have a website. If you like, I can put it right here on the chat. So everybody, but everybody needs to be approved broker with us. But yes, you guys can use all our flyers once you guys are approved.
So we call it Flyer Paradise. So once you're approved, you just go right in. We provide logins, and there's a whole myriad of all types of marketing material to consumers for you. And when you log in, it automatically populates your information. So you have a whole marketing team on your side. And obviously everyone has an account executive. If you have any ideas on new marketing material, maybe it is just to switch up a picture because you're in Hawaii, for instance, we can do that for you as well.
Seth, the one question I'm not sure about, do we have an annual fee for the HELOC?
Yeah, I think it's $50 to the servicer. So it's not some outrageous fee. But I want to reiterate two different things that keep coming up. Number one, there's no EPO. So your borrower can pay this back right away. No EPO, no EPD, no prepayment penalty. The other thing is our title team, again, can pay off any lien on title to help clear it up and get this loan to closing. And that includes IRS liens or anything like that, delinquent taxes.
How many HELOCs can you do for one client at one time?
I want to say it's 4 or 5. I don't remember exactly. I want to say it's 4 or 5. But my suggestion is to do one at a time and just power through them because they're so quick that it's not like it'll be a huge delay between submitting the first and maybe the last one.
Okay.
Another question that I've seen a couple people asking is about the initial draw on HELOC, the maximum amount you guys get paid on the total HELOC amount. Even if the borrower's only borrowing 75% of the HELOC at closing, you guys get paid on the full amount.
Awesome. Well, I want to make sure we get to the other products. So I'm going to hand this off to Sandra and Julia. Or Julie, sorry, Julia, sorry, it's been one of those days. And they'll take it from there.
I will add, we have many questions, so we will make sure all these questions are addressed. We'll pass this over to our colleagues.
I'll keep answering the questions, Harish, so I'll keep answering.
Thank you.
Mm-hmm.
Thank you, Sandra, I appreciate that.
Cool. Well, I'll just dive right into non-QM. Hi, everybody. I'm Julia Murphy. I'm going to start with DSCR. So this is basically everything that we offer as far as non-QM products go. And I apologize in advance. I'm from New Jersey. We all talk very fast here. So I will try to slow down for you guys.
Harish, with your technology, can you actually slow her down a little bit or no?
If I can figure out how to slow myself down, I'll slow her down.
We all have
Harish
type A
does as fast as I do. What are you talking about? Okay, so non-QM products, we offer a ton of them. This is kind of just the most popular ones that we have on our screen, but DSCR and bank statement, I think, are always the most popular, but there's a lot of other good options on here too. 1099 only, I think, is a kind of more rare one. I don't see used as much, but it's a great product. I think sometimes people stick those bank statement borrowers into 1099 where they, or into a bank statement loan where maybe a 1099 loan would work better, or maybe a P&L loan would work better. So it's a good idea to kind of educate yourself on all of these different non-QM options, so you know that you're placing your borrower in the product that works best for them and in the product that is going to result in the most usable income to be used for them, so we can qualify them for as much as we can. So I'll just run through. I guess I'll start with DSCR. So a couple different buckets for debt service. So we have our Elite Access product and our Access product. So depending on where your FICO, LTV, DSCR come in, you're going to decide what product makes more sense for you. As you can imagine, Elite Access is smaller bucket, better pricing. Access is bigger bucket, a little bit worse pricing. So you just got to see, what makes sense for you guys. So DSCR, Elite Access, we have buckets for above 1, and then we have buckets for 0.8 to 0.99. Whereas Access, we have buckets for below 0.75, 0.75 to 1, 1 to 1.25. So a little more options there as far as the debt service goes. We do look for landlord history, although we have ways to waive it. So like if you have above a 680 FICO, you own your primary, you can waive landlord history. That's not, all the specifics, but you get the idea. So that's really the gist of the debt service. It's a good idea when you're working with a lender to know that you have options if your rental income comes in low. So if you send this to, a lender that doesn't go below 1 and your rental income comes in at 0.8, or your DSCR comes in at 0.8, you're stuck sending this to a new lender. So first thing is we allow down to no minimum debt service requirement on access, but we also take transferred appraisals. So it's a good idea, when you're working with a lender to know that.
Hey, Julia, so one of the questions came up on the HELOCs. Do you offer exceptions? And Seth's response was, no, we don't typically offer exceptions. That's completely different on our non-QM product. I think every loan comes with an exception, I think, these days.
Yeah, we are doing a ton of exceptions. Frequent ones I'm seeing is like first-time home buyer and DSCR is a popular one, where we may as well just write that in our guidelines now because we're doing so many of them. Loan amount exceptions, I get like our minimum loan amount's 125. We get exceptions for lower a lot. Visa types is another one we get big exceptions for. So always ask if you think that you're close to fitting the bucket and you're kind of like just missing it for one reason, always ask your account executive. It's always worth a shot. Definitely don't just, say no based on the written guideline. I'm going to pass it to Sandra now.
Oh, sorry, Julia. I'm just trying to.
Are you answering questions? You want to like try to get a bank statement?
Yes. Okay, well, I think that the number one, and I feel like that's a lot of loan offers don't know, and I would want to go over that, is the 1099 only program. A lot of people think that because you just became 1099 a month ago, that you may just not be dead on the water with a loan. However, with the non-QM, if the borrower has at least 2 years history and the same amount of work, and they just became 1099, we could do that loan under the 1099 only program. So I feel like that one is a good guideline to give you guys heads up. Don't ever say no. And obviously on our non-QM, we could do some exceptions there. So that's the good thing about REMN. We will look at the whole picture and try to make the files work. On a bank statement, we can do 50 the same. Let's say if you have a borrower who just became self-employed 12 months ago, but has been in the same amount of work prior, we can also help you guys with a bank statement loan. Julia, I'm not sure if you want to go with the asset qualifier. I don't really do much of those. So the P&L.
Julia, that was for you. You're on
mute.
Sorry, Sandra, you're breaking up a little bit there. So I'll chime in on the P&L. I actually do a decent amount of the P&L loans. It's a good product. So very different from the 1099. 1099 borrowers, obviously, we're just using for that product. But P&L is better for, truly self-employed borrowers who don't fit into a bank statement or a 1099 product. Good thing about this one is it's just a CPA prepared P&L. It doesn't have to be audited, just prepared by a CPA. And we actually no longer need the bank statements to support the P&L. So we're just calculating income off of the prior year's P&L and year to date, depending on where we are in the year. So at this point, we'd need the year to date as well. But that's a really cool product. Again, I think the only people I see going into a P&L product are people who don't fit the bank statement or the 1099 bucket. I think we're pretty much trying those first, mainly because a little bit better pricing on the bank statement and 1099, but also higher LTVs on those. So we're capped a little bit lower on the P&L, higher FICO requirements. But it's absolutely a good option if you have somebody who's not fitting a bank statement loan. Full doc, I wanted to talk about a little bit. So most people don't know what to use a full doc non-QM loan for. If I can go full doc, why wouldn't I go Fannie and, get a much better rate? Full doc, I'm actually seeing a lot more of. And I kind of call it like the Fannie fallout product. So basically, if you can't get approve eligible findings or in a DU or LP, or if you have a non-mortgageable condo or condo-tel. I also have a lot of people going full doc. It has an interesting guideline for self-employment history. So if you have like recent W-2 to 1099 or recent W-2 to K-1, you can actually go full doc non-QM with very limited history. So like if you let's say you were a truck driver for 5 years and you just went from W-2 to 1099 a month ago, you can do that with full doc non-QM with 1 month history of technically self-employment. There's not a lot of options for those borrowers, the people that have the less than 12 months of self-employment. So full doc non-QM is a good option for that.
Adding to the full doc, Julia, yesterday I was pricing, a jumbo loan, and with the elite pricing ended up being a better rate for the borrower than going with a true jumbo. Also, the non-QM full doc requires less reserves than a regular jumbo loan. So if you have a $3 million loan where they're not gonna have the 12 or 18 months PITI reserves, I always suggest that program.
Yeah, I think the pricing, I've seen that as well, is that price is better than the vanilla jumbo, the full doc elite access non-QM. Also probably higher DTI as well. We go to 50 DTI, and that's where a lot of jumbo products are capped at 40, 43, 45. So higher DTI, sometimes better pricing. Yeah, that's a great thing to point out there. Foreign national and ITIN, we do. So foreign national, we define as somebody who's living and working in another country, just purchasing or refinancing an investment property here. I know everybody kind of defines that differently. What is a foreign national? Versus ITIN, we consider somebody to be, somebody who's residing in the United States. So we're just doing that as primary and second home, full doc and bank statement right now. So definitely a ton of options here. I'm sure everybody's head is spinning with all these options. So feel free to put questions in the chat. Yeah, you have some questions in there.
Let me see. What is the minimum credit score for ITIN holders? Hold on, guys. That one, Julia, do you know on top of your head which one?
I'm pulling it up right now. I don't know on the top of my head.
Okay.
One thing you're going to notice with the account executives at REMN, they're all very, very tenured, but they're all very, very knowledgeable. They're not going to not answer your question if they don't know it. It's just so much information to know, so many different products. They'll find it and get back to you right away.
It's minimum 680.
680.
700 on a cash out.
So some people are asking for rate sheets, Carl. I'm not really sure how to handle that. I see some questions about it.
If you're already currently working with us and you're approved, just reach out to your account executive. That sets you up. We can set you up through our secondary department to automatically receive your rate sheets every single day. If you're not approved with us, there's a couple of ways you can get that. Reach out to one of us. At the end, all of our email addresses will be on here. We're also on Lender Price, and we're also on Loan Sifter as well, OB, and also Poly, if that means anything to anybody as well.
And I will add, Carl, if you are not approved with REMN Wholesale, you will still see them in marketplace pricing in ARIVE. So you will see them in your approved list if you're approved with them. But if you're not approved them, they're still visible and you can sign up with them. Also, Carl, if a broker is approved, does every loan officer need to sign up for HELOC, or everybody gets automatic access, or does individual loan officers need to sign up?
That's a great question. So if you're already approved with us, you have access. It is a different portal, and you have full access to that. Just reach out to your current account executive and they'll get you logins. It usually takes about 2 hours to get them. So you'll be able to be up and running. You can actually upload a HELOC same day, even if you don't have logins yet. We also do have a fast track. So if you're not approved with us, there's a way, if you're only intending to send seconds to us, the HELOCs, we can get you fast tracked to get you fully approved very quickly in order to start submitting the HELOCs. And then after the fact, if you want to do first, you could do that as well.
Thank you. I had somebody ask, is the HELOC pricing available through ARIVE? I don't know if it's changed recently. I don't believe it is.
So you're correct. The HELOC product is a separate portal. The non-QM pricing and products are available through ARIVE. There was a question from our recent mutual customer, Arbor Financial. Can you price non-QM in ARIVE? I just did that through their account. So anybody who is approved with REMN, or even if you're not approved, as long as you set up the parameters correctly as non-QM, their products will show up along with the price.
Cool.
Good questions.
Yes. So Julia, do you do a lot of asset qualifiers? Because I have an interesting question here for that one.
I don't say, I would say of all the non-QM options, that's probably the least popular one, just because there's the least amount of borrowers that fit the bucket for it. But I've done a few. What's the question?
Well, they want to know how do we qualify them, and I believe we have 3 different methods to qualify an asset, for asset qualifier.
Yeah, exactly. So there's 3 different calculations to choose from. Just going off the top of my head, I think the first one is like total loan amount plus 5 years of other liabilities. Another one is like 125% of the loan amount, plus like 30% of other debt. There's like 3 different calculations, and you basically choose the one that works best for you. And which one you choose is really dependent on how much other debt you have. We can set, just so everybody knows, if you're looking for guideline stuff, there is, all of our guidelines are public. So if you go to remnwholesale.com and then go to products, you can find every product, every guideline for everything, all the products that we offer in there. Control F, you guys can find questions. I always, of course, come to your AEs too, and we're happy to help you. But if you want to be self-sufficient, you can definitely hop in there.
It's very easy to find. What one question was about loan amounts, full doc jumbo up to 4.5 million. We say 3 million, but if you have a really strong borrower for 4.5 million, that is a doable loan with us. Obviously, it has to be a lower LTV, some great assets, good credit, and so forth. But if it's a really, really strong file, definitely run that by your account executive. We do those all the time.
Cool. I got asked about bridge loans. We do not have a bridge product. The HELOC product, depending on your situation, may work for a bridge. It can't be listed in the last 90 days. So
60.
I
think it's 60. Yeah.
It's
yeah.
So depending on your situation, could possibly work. Again, there's no prepay, there's no APO, but if your subject property is listed, then it's got to be removed.
Carl, so somebody wants to know about our technology platform.
For first or for HELOCs or for the first?
I believe for the first.
For the first. So we have a homegrown portal and LOS. If anyone's heard the company Blue Sage, so we hired Blue Sage years ago, and it works rather well. It's a very intuitive platform portal. Everything you ever want to know is right there. With the HELOCs, it's a little bit different. It is a separate portal, like we said, and that is it's an amazing portal. Everything you ever want to know about your files is really right there. Even once the file closed for disclosures and so forth, is everything's accessible.
I have a good question in here. Somebody asked, how are most successful brokers using this product in their business? I like this question. So the brokers I see doing, or the LOs I see doing a good amount of these HELOCs, I'll speak to HELOCs specifically, are, for lack of a better word, not spending that much time on it. So the great thing about this product is that this is not a fully underwritten loan. You don't have to spend, hours processing this, uploading conditions, reviewing your approvals. This is a quick product. So the way that this is supposed to work is you send the borrowers the link to apply, and then it's hands off from there for you. So best case scenario, and of course there's everything in between where your borrower comes to you with questions, but best case scenario, you're sending this borrower a link to apply. They're going opening to close, whether it's same day, best case scenario, or 7 days or 6 days, which is our average. They're going through that and they're corresponding with the Nifty team, or they're using the live chat, or they're using the borrower's phone support number, and they're not involving you. And you get your check for 2 points of the full line amount a week later, and all you did was send the borrower the link to apply. So the way that successful LOs are using this is they're not getting that involved. They're sending the link for the borrowers to apply, and they're waiting for their checks to come.
I think the most important thing, especially right now, is to recognize the fact that homeowners typically use cash out refinances to finance their lifestyles, right? If they're doing home improvements or school or whatever. And that hasn't happened because of the way the interest rates have been, right? No one's going to refinance out of a 3% rate at this point. But people are running their credit cards up. So if someone has, and it's not atypical these days to have $15,000, $20,000, $50,000, $75,000 in credit card debt. And those interest rates, if you haven't noticed, I pay my bills off every month, but when I get my statements every month, I see 29.99, 34.95% interest rates. That's real interest rates. That's what they're paying. They need help. So this is a way in the short term to help them get out of their debt situation or do their home improvements, whatever they need to do. And then once rates do start to come down, it might make sense if we're in the fives and a first and you have a higher interest rate HELOC to actually do the consolidation. You need to stay in touch with your borrowers to make that happen. So you can literally help your borrowers today make some pretty good income and then down the road, really set yourselves up for a refinance market. That's what a lot of loan officers are doing today.
Yeah,
I have
and
a
I
question
think
for Seth. Because I'm not sure about this question, Seth. Can you pay off federal taxes not on title but fraud?
yeah, I mean, we allow paying off anything that you're looking to pay off through the loan. We will just have it as a payoff listed. As long as the borrower gives us the address and the account number that they want us to send it to, we can pay it off.
Thank you.
Yeah, and I think I just wanted to add to Julia's comment about what makes someone successful here. And I think it is working with your AE, understanding the product guidelines. So you're not always asking questions, you know, when the borrower calls, knowing the product. But also they've got Flyer Paradise, where they can provide you with a tremendous amount of marketing. And then staying in front of your clients is one of the best ways to do this. You know, send out an email every couple of weeks, just advertising something different. Because if you're not, we have so many other companies that are reaching out to everyone at all times for a HELOC. This is your client. This is your borrower. Stay in front of them. And again, set yourself up for future purchase opportunities, consolidating your first and second, but really use that custom marketing link, put it on social media, in your signature. It makes it so easy for you guys to generate business, and then just leads to the easiest process.
You know, so I do want to add though, like any other products, right? You have to choose the right product for your customer, which meets their needs, not necessarily their wants. And I think this is a product that is not for someone that just doesn't need the money. They just want it as a backup, and they can wait 6 weeks to get their loan, and they want to go to a credit union or a bank and get that 5% right interest rate. This is for someone that really needs the money quickly. And that's really what it's about. The interest rates might be a little bit higher, a couple percentage or a few percentage points above your credit union rates, but this is a way to give them the cash that they need now, or they may have applied for a bank or a credit union in the past and were denied. And this is just another way to get them that loan. We are currently doing hundreds of millions of dollars a month in these HELOCs, hundreds of millions of dollars. There is a significant need for this loan. And the other thing I want to mention too is a lot of you that are on here might be working for very large organizations, nationwide companies, being a branch or so forth. We do offer this as a correspondent program as well. So reach out to me or Seth if that's something that you or your company is looking to do, is to work with us on a correspondent channel wise. And that way it becomes your product. But most of our business is through the broker channel.
I just want to piggyback on the credit union piece for a minute. Keep in mind, guys, one, when you're having the rate conversation, that the rates don't seem that high when they're paying 30% on a credit card. They're the 9.5% where they're going to be paying on our HELOC is not that high compared to 30%. But also what I want to add is when you refer your borrower to a credit union for a HELOC or a bank for a HELOC because you think that you can't offer the best rate, what you're doing is passing your borrower to somebody who also does first liens, who also does purchases. So they're now creating a relationship with somebody at a credit union or a Bank of America or a Chase that's also going to solicit them when it's time to purchase. So you don't want to refer your borrowers anywhere because they're creating relationships with other loan officers.
And I wanted, if I could piggyback, I was just in an event for a large brokerage and they had a speaker kind of talking about looking at your portfolio of past clients and a lot of them being locked into these really low interest rates and that creating, call reluctance because it's like, well, what am I going to reach out to them for? They're not going to want to do a cash out. They've got 3.25%. I mean, you don't know when people may need cash, right? There could be a death in the family. There could be something urgent that's happening where they need to get cash. And so you're doing a disservice if you're not reaching out to your portfolio and just asking that question. Like there's equity, right? And I can get cash quickly. Please call me first. Let's talk about what our options are. And I'm going to guide you to the right product, to the right, way to get you this cash, whether it's a slower process, a quicker process. But if you're not putting yourself out there and having that conversation, assuming that they won't want or need that money, then, you're not realizing the potential in your past portfolio. So I really appreciate this product and you guys speaking about it today.
Thank you, Amy. That was a good comment because when I first got in the business a couple of years ago, I was a loan officer, and every single Friday my Fridays were devoted to calling my past clients, and there wasn't a time that I didn't get new business, new loans. So just keep calling your customers. There's definitely lots of business. They might not need a HELOC, but their friends or family might.
Yeah, and I think if you think about the current time, we're in spring, heading into summer, people might, this is sort of the home improvement time frame for a lot of borrowers. And with a HELOC, because they can draw when necessary over those first 5 years, they can make payments that align with whatever the contractor draw schedules might be. So they could do the deposit, and then each draw, they can make the payments, and they're only paying on what's outstanding, as opposed to if they took an entire loan out, they'd be paying the entire amount regardless of when that money is spent.
Again, when we first started this, I guess it's been about 50 minutes ago, we talked about all the different types of products that REMN Wholesale has to offer, and the fact that we're only wholesale. Again, today we've only gone over a couple of the non-QM, the HELOCs. That seems to be the hottest products right now, but we offer a whole variety. You can see our contact information here. You can reach out to any one of us. If you're currently approved with us, we'll be happy to introduce or reintroduce you to your account executive to get you connected. But if not, we'd be happy to talk to you about signing up with us so you can offer these products. But Harish and Amy, phenomenal. We really appreciate the opportunity to get in front of everyone. We will be answering, we'll do the Q&A on all these questions to make sure that everyone gets their answers. But we appreciate everyone.
We want to add our FHA pricing with a 720 FICO score. It's phenomenal. Also, our conventional to $350,000 loan amount, guys. It's amazing. So please price us out. I know we just talked about HELOCs and non-QM, but definitely you want to look us for those type of programs too.
And the DSCR special above 400,000, we've got a 1-point special on as well.
So thank you, Carl, and everyone. We are almost at the top of the hour. I do want to mention we got a customer testimonial right inside this webinar. Maybe one of our customers, Fatima Carter, talks about how easy it is to work with you guys. Like your HELOC was way better than some of the other products out there. So this speaks to how we have built this program and how easy it is for our mutual customers to get access to this valuable product. So kudos to all of you. Hearing directly from customers, nothing speaks better than that, as we all know. So thank you for offering this to our mutual customers and making them successful. So anything else? The recording will be available, as I said, in a few days in our YouTube channel, and we will make sure if any question was not answered, we'll pass over these questions to our panelists to answer them. Anything else?
The only other thing I'll say is, Harish, I'm sure I'll see you, but REMN Wholesale will be exhibiting at Originator Fest in Las Vegas, Originator Connect in Vegas in August, and we'll also be at the NAM event in Vegas in October. So we'd love for you to stop by and say hi and talk more about these products.
Thanks, REMN team.
Thank you so much. Thank you for
Thank
joining.
you so much.
Thank
Thank
you.
you.
Bye, guys.
Thank you.
Bye.